All right, let's jump right in. We are going to tackle one of the most stressful, most chaotic moments in all of trading, that morning gap. Our whole goal here is to show you how to turn that dizzying chaos into crystal clear, objective clarity.
You know the feeling. The opening bell rings and a stock you're watching just falls off a cliff. Your heart starts pounding, your gut is screaming, "Get out now." But is that just panic talking? Or is this one of those rare, hidden opportunities? That's the multi-million-dollar question, isn't it?
So let's really dig into the problem itself, the sheer chaos of that morning gap.
So a gap down. That's when a stock opens way lower than where it closed the day before. It creates this vacuum of information. You're basically flying blind. And that's when our brains default to fight or flight. We react with emotion, with fear, instead of looking at the actual evidence.
But what if there was a better way? What if you could sideline that emotional reaction and instead rely on a disciplined, rule-based framework to guide you through the storm? Okay, so if that's the problem, what's the solution? Well, it's all about building an architecture for intelligence.
And this is it, the Unified Intraday Analytical System. Now that sounds pretty fancy, right? But what it really does is simple. It takes all that messy, raw, chaotic market data and turns it into something structured, something we can actually understand. And the way it works is just brilliant, really. It uses 3 layers that all work together. You've got the map to show you the terrain, you've got the compass to give you your direction, and you've got the sonar to check for any hidden dangers below the surface. Let's break down each one.
This GPS analogy is just perfect. I mean, without a map or a compass, the market really is just a confusing wilderness, isn't it? This system is designed to be that guide, to literally turn a wild, scary trail into a clear, navigable path.
Okay, layer 1, the map. And here's the secret sauce. This map is drawn before the market even opens. These levels are fixed reference points, kind of like permanent landmarks on a trail. They don't move, no matter how crazy the day gets. This gives you a stable, objective anchor in the middle of a storm. Now for layer 2, our compass. This is where things get really cool. The system looks at what the market is doing right now and classifies it. In this case, it's basically shouting strong bullish. And the absolute best part? It's non-repainting. That's a huge deal. It means the system can't cheat and change its signal later on to look smarter. What you see is what you get, in real time.
And that brings us to layer 3, the sonar. Honestly, this might be the smartest part of the whole system. Its job is to tell the difference between a small dip, a healthy, constructive pause, and a really deep, dangerous pullback that signals the whole trend is about to fail. It's all about validating the strength of the move.
And here you can see it working. See those little green markers on the chart? Those are the sonar pings. They're constantly tracking the depth of every single pullback, giving you this live, objective reading on the health of the recovery. Is it strong or is it on life support?
All right, enough theory. Let's put this whole system to the test and see how it actually navigates a real-world recovery.
So for our case study, we're heading over to the Chinese capital market. We're looking at 3 different stocks on a very specific day. And the conditions were, well, a perfect storm. A super volatile open that was guaranteed to challenge any trader. So, what happened? Boom. All 3 stocks opened with that exact kind of chaotic gap down we've been talking about. Total panic situation, right? But, and this is key, remember layer 1, the map? Those predefined support levels held firm. That was the first critical signal. The system didn't see a catastrophic failure, it saw potential value acceptance.
And just look at this progression. On the left, you've got pure chaos right after the open. On the right, a structured, methodical recovery later that same day. The system was able to track that entire journey, layer by layer, confirming the transition from a terrifying drop all the way to a validated, bullish trend. It's pretty incredible to see.
So, when you boil it all down, what's the real lesson here? It really all comes down to the power of pure objectivity.
At the end of the day, what this system does is take something that feels totally random and noisy and converts it into a series of clear, understandable market states. It forces you to shift from reacting emotionally with your gut to understanding structurally with your brain.
So here's why this is such a game changer. First, it completely replaces emotional reactions with a solid, rule-based framework. Second, it gives you transparent tools that don't change the past to look better. Third, it validates the strength of a trend as it's actually happening. And when you put all of that together, you start to build genuine, rock-solid confidence in your ability to see what the market is really doing. And that really leaves us with one final big question. We've just seen how a layered, intelligent system can bring this amazing level of clarity to a volatile financial market. It just makes you wonder, what other complex, chaotic systems in our world could we finally start to decode with a similar approach?
This is the brief on intraday analytical systems for Chinese capital markets. You know, analyzing the volatile Chinese market requires objective analysis, especially after those sharp moves. Well, our sources detail a rule-based system designed to turn raw trading data into real-time intelligence. The core value here is total objectivity. It uses indicators that don't change later, so the analysis is free from subjective interpretation or hindsight bias. So, how does it work? First, it uses a three-layered architecture. You have the opening structure, bias classification, and retracement validation. Together, these layers establish context, classify the market as bullish, neutral, or bearish, and then validate if that trend is holding. Second, this framework is crucial for handling those big gap-down openings. By setting reference zones before the market opens, it can immediately tell if a price drop is just panic selling or a real structural breakdown. In the stocks analyzed, support held firm, demonstrating value acceptance. This allowed the structure to stabilize and shift toward a bullish alignment. Finally, the retracement validation layer acts as the system's final integrity check. It tracks pullbacks in real time to differentiate a constructive pause, which is just a healthy breath that confirms the trend, from a structural failure, which suggests a reversal might be underway. This validation really strengthens confidence in the overall assessment. Ultimately, the system provides disciplined structural analysis by turning unpredictable price movement into explainable, actionable market states.